Okay, took a trade today. It's a break-even outcome. Now, I will attach the link either here or at the top right, top left of the screen, and in the description, the link to my full trading session today. Fantastic trading session. The outcomes, the analysis, the breakdowns, the way we've depicted price action, and the validations to enter the market into this trade position execution, absolutely phenomenal. If you want to see that, link is in the description and you'll see it somewhere up here. Let's first go over the trade position really super quickly. Now, it was a break-even outcome on the trade position. However, we were coming up to New York Open. We saw a potential for a temporary pullback because overall, when you look at the daily time frame, daily candle was very bearish. Now, I don't know if this image will depict it any good. I don't think so. But the daily time frame is in a support area. So if we just go to live price action, this is another position opportunity. We didn't get into it, but we looked at it and you'd currently be floating risk-free. But that's irrelevant because we didn't take the position and we didn't get the proper validations. This is the current daily time frame. Now, if we actually just remove all of my, just want to reset the charts, and we go depict the daily time frame. What's the daily time frame showing us right now? Well, when you zoom out, price structure is giving you an area. For me, I feel and I see that this area here is potential support. You've had price action push up from this area before, push up from this area before, replicating the highs to push up towards 5,500. This is a key pivotal moment because price action, if it gives you the closure below, which it has today, it's giving you the first candle closure, is now depicting a very bearish mood, which means tomorrow you will probably start to see bearish indications of a top wick retest, rebreak of the lows, challenge the lows, and you're in the sells to come down towards 44.14. That is what we're looking for. But today is a bit different because you don't yet have that closure. You're at that pivotal moment. So for me, it was very hard to depict what the daily time frame is going to do. So understanding this, when we go back to the position entry that we had, we understood this is a temporary pullback based off your 4-hour time frame. The 4-hour time frame gave us, I don't think I have a picture of the 4-hour time frame here. This is on the 5. Your 4-hour highs is up here, right? And the hour time frame that we were currently trading was really neat. This is the 30-minute time frame. The current hour time frame needs a top wick, right? Price action has come down, swept its lows for price. Therefore, it makes sense for us to take an entry. So if we go over to your checklist, you've got the current range that you were in, that's checked off. You've got the liquidity area that you filled. On the lower time frame, you already filled this. This is on the 30 minutes, so you can just imagine the lower time frame as well. And then you've got the narrative been built because on the copy of price action to the left of the screen, we saw something similar. I don't know if I can still get that line up. I don't think I still have it yet on my screen. If we can just go all the way back to that previous position, I don't know if we can have that or not. No. Still not the same position. Still not the same position. Still not the same position. Let's see. Okay, so we found, I think, yeah, this is the position. So you look on the hour time frame. You had a closure back above, This is the current hour that you're looking to execute. But when you look on the 30 time frame, you had the rebreak of the lows. When you had rebreak of the lows, you're looking at taking the buys up, which is this candle here. So you re-challenge those lows in the previous hour. That gives you the validation. Now, when you look towards the left, you've also got copy on price action. Now, this is only validated on the lower time frames. Not validated, sorry, but you can only see it on the lower time frames because it happened very quick. It was a liquidity grab. There you go. So price action came down from the same areas, liquidated the same area, filled it to then reject. That is the narrative that we're looking to target on price action. So when you go back to current price, what we saw was you got the 30 that retested the lows, you want the rebreak of the highs, you got the rebreak of the highs, and your risk off area is going to be right here at 46.06, which is your hour flip. That is your advantage point. So you move risk off. As you can see, we didn't quite tap that area, but we moved risk off for a very good reason, because your 4-hour time frame only was, I think, 7 minutes out at the time. So we decided to manage risk by moving stops to break even. We understood that the lower time frame has already given you bearish forms of behavior in terms of price action structure. You see here on the 5, you had price action start to push you up but kept falling short. That 5-minute candle did it for me because you closed back in the range respecting on the lower time frame. So the next chance you had, which was the 15 candle open, pushed up, wick fill, broke the highs. You should be expecting a very strong drive. If you don't get the strong drive, you're most likely going to come back down. Price action gave you the closure of a body of the candle below the previous wick high, indicating bearish indication. And true enough, as you came up to the 4-hour time frame is more likely to come down to get the wick fill. What did price do? Come down to get the wick fill. So it made sense when you're looking at dynamically managing a position to take risk off of the table when you're already, at this point, we were floating 106, 107 pips in ticks and profits. So it would be foolish of me to say, look, you weren't quite at my risk off area, but you already can notice, you can see and understand, acknowledge price action is giving you bearish from as an indication. Why do you not want to take risk off the table if you know that the price likely chance of the 4-hour time frame to come down for a wick fill to re-challenge the lows, which is past your stop loss level, is going to be retested? It would be very stupid for me to just sit and wait for me to hit my stop loss of a minus 124 ticks or minus 128 ticks, I believe it was. So there you have it. That was a really good trading position. It was a complete break-even trade. We filled out the journal on this as well. Break-even trade. It's $0, 0 ticks. We had minus 89 ticks of drawdown. Now that was one thing. If you go watch the full trade session, you will see when we took the trade position, I was like, oh, what is happening on the lower time frame? I'm not too sure, but you can see, even though we were narrating it and we were a little bit on the side of, oh, we don't know, we're erring caution, is this going to re-break the 15 lows? Did we get in wrong? No. I understood when we ran it back and we re-broke down price when we were in the position, I understood, look, we are validated in trade position, we understand that we followed the plan, so we have to trust the process of the 1 to 2. We've met all of the requirements as an A++ setup, and true enough, it was an A++ setup that unfortunately came down to a break even, but we moved risk off of the table from a good dynamic management. Today on the charts, I think I've showed a very, very good era of discipline, and it's a good step forward in the right direction to becoming profitable. Again, we're trying to gather as much data as possible onto the charts. A break-even outcome is better than a loss outcome, and we understood that the reason we avoided the loss is because we used the dynamic management. We used a clear read on the current live price action of candle openings, closings, and behavior of wicks to make a very validated decision to close out earlier at a risk-off area rather than letting price fall all the way down. It's been a really good day, and we'll come back tomorrow to see how Wednesday pans out for a London and New York trading session.